selling going on. David Stryzewski is with me this morning. I want to concentrate on Microsoft. As you know, obviously, they just reported late yesterday. First of all, and the stock is now down 3 1/3%, $8 lower. What's your judgment of the Microsoft report?
Well, great to be with you here this morning, Stuart. Microsoft held up pretty well yesterday, at least on the initial blush of some of the news. I was excited to hear that they at least beat the earnings expectations by 2%. Of course, we saw sales down for the lowest it's been in about 6 years on a quarterly basis, and so that's not great news. But I'm not a day trader, so we fundamentally have been able to review Microsoft as an organization and determine that if you've got a longer trajectory and timeline, that there's a great opportunity here as some of these AI integrations and some of these things that they're doing in cloud space as people are working from home are incredibly important to the economy that it seems like we're ultimately heading into.
Well, will the Microsoft report put a chill on the overall market? I mean, other big tech stocks, it seems to be doing exactly that.
It seems to be doing exactly that, but I would say that how it held up yesterday seemed at least a little bit more positive to me, given that earnings have been this big question mark as we headed into 2023. Have earnings expectations been too high? And so certainly things are cooling off here today. We've got more optimistic times and we got more pessimistic times. This happens to be seemingly one of the more optimistic times, at least in comparison to like June and September of this last year. But we're going to ultimately see where Jerome Powell goes here in this next week, and I guess we'll get some more guidance.
All right, David, thanks for being with us. Appreciate it. Back to you, David Barnson, standing next to me.